Hello, everybody, and welcome to SFR Talk. This is our very first episode. We're going to continue to have these as we go throughout the year. Make sure that everybody's up to speed on the recent trends that are happening in the SFR space. So welcome. Glad to have you here. We will have Q&A at the end of this. We're going to run through about a 15-minute presentation. Feel free to put any questions that you may have during this presentation in the chat, and we will address those at the end of this presentation. So today we're going to cover our top leasing trends that we are noticing here at HRG in the SFR space that's happening here in 2024. I am Scott Heimel. I am the Senior Vice President of Operations and Sales, and glad to be here with you and moderating today's conversation. I'd like to introduce our next colleague that's going to help us, Miss Angel Brown. So if you can give us a little background about yourself, Angel, that would be great.
Thank you, Scott. Good afternoon, everyone. My name is Angel Brown. I am the Vice President of Leasing, Renewals, and Underwriting here at HomeRiver Group. I'm a people leader. I believe in culture and team building, process and procedure implementation, customer partnerships, and real estate management. I am happy to be here to talk about the top rental trends that we've been seeing.
Great. Thank you, Angel. So glad to have your experience on our team around leasing. And we know that you come from this area of leasing. So glad you're with us today. So let's go ahead and dive right into our topics. So we're going to cover three main leasing trends today that we're seeing across the market. And we'll start with our first topic today, which is trend number one on renter preferences. So Angel, what are you seeing out there? What are renters really wanting out of a rental property? What's persuading them to apply and lease a property? And so let's go through that. Let's talk about that a little bit.
Trend number one that we're seeing, it's very cliche, but it is location, location, location. We've seen renters prioritizing the characteristics of their neighborhood and the amenities in their rental property over shared community spaces. Renters gravitate towards safe, quiet neighborhoods, though convenient to stores and restaurants. Just like with any business, location can have a significant impact on your revenue. Great tenants look for properties that are close to their employment, as well as grocery stores, restaurants, and community parks. For larger properties that might appeal to families, the nearest schools will also determine whether a location appeals. It's all about lifestyle quality, and a great tenant is often willing to pay more or overlook less desirable aspects of the rental unit if the property is in a great neighborhood. Next rental preference, Scott, is property features. So property features like appliances. It's essential to have appliances in good working order, and newer appliances generally have better energy ratings, which can lead to lower bills for tenants. Appliances such as ovens and washing machines are used daily and are a significant factor for tenants when looking for a place to live. All appliances are rated using a letter scoring system, with A being the best and most energy efficient. Properties with modern appliances and good energy ratings appeal more to tenants than old, inefficient appliances. New appliances are especially attractive to tenants because they are less likely to break down inconveniently, reducing the need for repairs. Another property feature is outdoor space. More than ever, outdoor space is critical for many tenants. A private fenced backyard or patio balcony is an incredibly attractive value add. It's a great way to differentiate your property from a similar one down the street. Providing a small space for tenants to enjoy the sunshine and fresh air can help attract more tenants, giving you an ample opportunity to select the best and possibly charge higher rent. Our third trend, sorry about that, Scott, is technology preferences. In recent years, there has been a significant shift in renters' comfort level with technology. Currently, 90% of renters are interested in completing most, if not all, rental processes online. This preference for digital processes is shared across all generations. Renters want to complete rental applications online, pay their rent online, communicating and submitting maintenance requests, and signing leases. This demonstrates how much tenants' familiarity with online processes has improved since the start of the pandemic. 61% of renters would like to be able to make their rental payments online. Text messaging is now the preferred method of contact for 59% of renters, and email remains the second most preferred method. And access to a resident portal. 70% of renters say it's important that their property manager or landlord provide access to online resident portal where they can pay rent, submit maintenance requests, and complete other rental processes. This ends trend number 1.
Yeah, so great. Thank you, Angel. So it goes back to what we always talk about in real estate: location, location, location. I definitely have 2 big dogs, need the yard space as well. And some of those numbers seem a little low to me about online payments, but I'm sure there's some people out there that still write checks. There's not many of them. I believe that we collect about 97% of our rent is all done online. So we're actually really leading those numbers, well above what people are requesting. So as we go into our trend number 2, we're going to talk about what's happening with rent, stabilize, slowing, and get through that. So I know we're starting to see a little bit of a slowdown in leasing right now across several of our markets. And for those of you that are new to HRG, we are in 30 markets across the U.S. We manage roughly around 26,000 properties across the country. So we have a pretty good pulse on what's happening with leasing and occupancy. I think our current occupancy rate today is sitting a little right around 92% nationwide. On the retail side of the business. So it's pretty good. We'd like to see that number a little bit higher. Occupancy is always important to us because if it's not occupied, you're not making money, and we're not making money. So occupancy is a really important thing for us. So let's talk a little bit about rent growth, Angel, and where we're heading with that in the rest of this year.
Thanks, Scott. A trend of 2024 started in mid to late 2023 and is expected to continue for some time. After the past few years of runaway rent costs, there are signs the market's finally beginning to cool. The average national rent has gone up roughly 20% in the last 3 years. While rents remain high overall, monthly rental fees have stabilized. Costs are rising less quickly and in many areas even dropping into more predictable patterns. This slowing growth impacts both landlords and renters. With more predictable rates, renters may feel more comfortable moving out than staying put. With more renters searching for places, you as a landlord may have a better pool of rental applicants to choose from. However, that also means you must know what to look for in a good tenant, and this is how you can prepare for that. Know how to set fair market rent. With prices fluctuating and some even going down, it's essential to know the market in your area. If the price is too high, you may have costly vacancies. Run a thorough renter screening. With more movement in the rental market, it's easier for potential rental scams to slip through the cracks unnoticed. Having data to back up your gut feeling can help you make better rental decisions. Some standard screening reports include eviction checks, criminal record checks, and credit checks. Another homeowner tip: setting the wrong rental rate is just one way to get behind before you even begin. Are you unknowingly making one of the most significant mistakes that kill profit? Number 1 is not properly crunching your numbers. When buying an investment property, it's crucial you first calculate all your expenses and what you can reasonably expect in rental profit. If you skip this step, you could get in trouble when you realize your monthly rental income only covers part of your monthly rental expenses. Doing the math may sound like a pain, but it's worth it when you consider your bottom line. Make sure to add up all of your expenses, including mortgage, taxes, insurance, HOA, maintenance, turnover, and management costs. 2 would be choosing a bad rental location. Location is a highly influential factor in why renters choose to rent where they do. If you're a new investor looking for a rental property, work with a real estate agent who is familiar with the area and can point you to some of the better neighborhoods for rentals. In general, tenants look for areas that are close to public transportation, dining, shopping, schools, and universities. And number 3 is ignoring maintenance issues. Not addressing rental property maintenance issues can quickly lead to more significant problems. What may have started as a small leak that goes unfixed could become a huge problem one day when the unit is flooded. In the event of a tenant turnover, you can take advantage of the vacant property and perform maintenance without the hassle of scheduling conflicts and bothering current tenants. When looking for a new tenant, a rental unit in a good condition is more likely to attract a better quality renter.
Great, thanks, Angel. Appreciate those. So, again, it goes back to what you were saying earlier on the previous slide, which is location and property condition are all really main drivers of whether your property is going to lease and at the rate that you need it to rent at. Expectation setting is really, really important. We got to make sure that we're running the right comps, that we have the property priced right. That is exactly what's going to move your unit. That's what is going to get at least the fastest. There's always expectations of, hey, I think I can get this. It's best to know, not think. And those numbers prove those out. We run those comps every day. We have multiple ways to get you those comps to make sure that we're pricing your property properly. That's a tongue twister, isn't it? Properly, so that way your property rents as fast as possible at the highest set rent that we can get for that. So again, knowing what you're buying is obviously really, really important. So thank you for those tips. Appreciate that. So let's go in and let's talk a little bit about future state. With the way that the market's going today with our number 3 trend, Scott, if you're still there, thank you. The way the market's going and home prices and a little bit of uncertainty with interest rates and obviously what's going on in the country today politically, there's a lot of factors that go in that adjust the housing market in general. So let's talk a little bit about that and the stabilization and where we think we're going to end here at the end of the year.
Thank you. Trend number 3 is future home values and prices remain uncertain. While the rental market is becoming more stable, there is expected to be some continued uncertainty in the housing market this year. The period of rapidly increasing home prices has slowed down, and experts are divided on what will happen next. Some industry experts, including Zillow, predict a 4.9 increase in home values by August of 2024. This prediction is mainly based on low inventory and high interest rates. This could be good news for homeowners and landlords looking to increase rental costs, but not so much for independent landlords who want to add another property to their portfolio. On the other hand, Newsweek reports that Morgan Stanley predicts a significant drop in home values. This prediction is based on favorable interest rates and increased inventory. If this happens, you may be able to purchase a new home at a more reasonable price. However, it may also mean that renters are taking the opportunity to buy, resulting in fewer renters in your area. A few tips about how you can prepare. Uncertainty looms over the future of home prices. As a landlord, here are some things you can do to prepare. Knowing how to price fair market rent in a high inflation environment can be helpful. This will allow you to adjust your rent prices accordingly if inflation rates rise. It's important to monitor your mortgage according to financial website NerdWallet. Federal Reserve interest rate and fluctuations can sometimes affect your current mortgage payments. These changes could impact your rental strategy in the future, so it's crucial to stay informed about what you owe on your mortgage. Additional homeowner tips to setting an optimal rental rate. There are various other methods for increasing rental income. Number 1, evaluate potential tenants before renting. Rent parking spots and storage units to tenants. Enforce renters insurance policies. Install solar panels on your roof to save energy. And consider renting your property for short-term stays. That is everything on trend number 3.
Great. Thank you, Angel. So we kind of started this, this SFR talk. We wanted to keep it short. We wanted to make it informative for everybody to be able to take something out of this. We do have the chat open. If anybody has any particular questions about maybe a market or maybe, things that you're seeing, we're happy to take any of those questions in the chat. We will continue to do these. Our next podcast is coming here, I guess SFR Talk is coming here in September. So look out for that date. We will be offering some, we will be bringing on around leveraging and financing of rental properties. In addition, finding rental properties is not always easy. Call us. We can help you with that. We have access to properties that clients want to sell all the time. We're happy to get you into the HR HomeRiver Group business and help you find a place. So looks like we do have a question in the chat, Angel. Where are the rents growing the highest? Where are you seeing those trends today based on our data? Now, again, we're giving you our data here, so I want to be clear about that. There's no, we're not pulling this from anywhere but the data that we market and manage in our 30 markets.
So rents are growing the highest right now in the Midwest area. That area, they have some of the most affordable housing costs. So we've seen the largest price growth in the Midwest area.
Great, thank you. Another question from Nicole. In terms of screening, is there anything illegal that I can't ask for requesting pictures of previous apartments / rentals? I want to start with this just a little bit if I can, Angel, and then I'll turn it over to you. Yes, there are all kinds of things that you cannot do when screening. I would love to give you the full list, but we'll give you a couple of them. Fair housing is a serious thing. And whether you're a massive company or you're an individual leasing a property, you still fall under the fair housing umbrella. And it's very easy to trip the fair housing guidelines, even unintentionally doing those things. And I've experienced those in the past, and that's really easy to do. So what is probably the number one thing, Angel? Again, let's just use the one example. Requesting pictures of a previous apartment or rental. I know the pitfalls of going after any previous landlords, but I'll let you explain that, Angel.
So that's not a fair housing violation because that's not a protected class, right?
Agreed.
We want to make sure that we are, we're not discriminating against familial status, the fair housing laws, race, color, religion. There's also some local laws that we can't discriminate against handicap. You always want to make sure you're not violating the fair housing laws for your state, federal, and local laws as well, because sometimes the local laws will supersede the federal laws. But I don't think there's anything wrong with asking for pictures from a previous rental. I don't know that an applicant would have that. So I think it would be a challenge to get those pictures. And I don't know that a previous landlord would provide that if you were looking for that from a verification from a landlord, because they may not even have that information as well. But that was a great question, Nicole.
Yeah, I actually think, Nicole, as well. Who knows if it was that actually previous apartment? Very easy to fake those things nowadays. Same with even previous landlord references. I've been in this business 27 years. I can't tell you how many aunts and uncles that I talked to as previous landlords that they put down a landlord's name that wasn't actually the owner of the property. The only way that you find that is by going and doing a deed search to see who actually owns the property. So there are multiple, ways that people get around that. So kind of careful on that. You're not violating anything, but you don't know if it's accurate or true is my biggest thing. I don't know the order of which these are in, so I'm just going to read questions. So if I don't get to yours just yet, be patient. Can you speak, Angel, to the Kansas City rental market? We've been doing really well in Kansas City recently, so I think you probably got some answers for that.
Yes, Kansas City is a hot market right now. Again, it's in that Midwest area, and it has some of the most affordable housing costs. So that's why we can increase rents. We're doing a lot of leasing in the market. There are some demographic challenges, but overall, everyone needs a place to live, right? So we're leasing very well in Kansas City. We're not having any problems. You need to have a standard fair criteria if you have properties to lease in Kansas City, and you can get people approved. We're doing very well in that market. Our occupancy in Kansas City right now is I have it here on the screen. We're at 92%, so we're doing well in that market.
Yeah, we've turned some of that around. So thank you for that. Again, it's around price and location always means everything in pretty much any market. So if you're priced right, your property will lease. Now, obviously, I don't know. I don't know your personal situation around how much you have financed and if it makes sense for you on that. But we can also help with that as well. So feel free to contact us, and we'll see if we can help you on that. Pros and cons of MLS flat fee listing for rentals. Boy, I got so much to say around MLS, Angel. But I'll lead with this. Syndication is really easy to do. To me, the MLS was really a way for other agents to connect with other agents to earn commissions and be able to share data, and the MLS syndicates. We don't need the MLS to syndicate anymore. And believe it or not, there's a bunch of markets out there. And anonymous attendee who posted that, I'm not sure what market you're in, but a lot of markets do not even use MLS for rentals. So you got some markets that it's really strong in, some markets not so much. What we have found historically with MLS is most of the agents that look to list properties in MLS are a trying to find their client the right property, but also there's usually a commission tied with that. We have found that raising that does not move the needle on running your property any faster when you're setting commissions out to the general open market. Again, to me, and sorry for stealing your thunder, Angel. I know you're the expert in this. I am not by any stretch, but just sharing some of my experiences. It doesn't move the needle. And with syndications such as Silo and I'm going to probably say some really old names. I'm not up to my syndications. I apologize. Hot pads and those things seem to be really powerful because the general population do not have access to the MLS. Only the agents have access to the MLS, and the MLS syndicates to all of those sites, which then just redirects it back to the agent anyway. So I'm not saying that, hey, agents don't have a use in this. They absolutely do. And they're a very important part of the real estate market. But when it comes to leasing faster and getting the highest amount of revenue for your property, MLS is not a guaranteed way to do that. The pros of it is it does get you some exposure to a whole bunch of agents, which is always good, right? Because agents are great and they help us all the time. So, Angel, I don't know if you have anything to add on that. I know I talked a lot on it, but I'll leave it up to you.
No, that you were spot on, Scott. I appreciate it. Thank you for answering. The only other thing I would add is that MLS is most beneficial when it's a high dollar home. You have to remember was created, I feel like, for sales. It was always a sales tool. It is now, has been offered for rentals, but the average consumer is not logging into MLS to find their rental property. And agents are typically accustomed to selling, and their commission that they get from a sale versus a rental listing is not very interesting. So they're mostly looking for a high dollar commission on MLS to even help lease your property. So those are things to consider. I would not. Data shows that MLS, we get very few rentals sourced through MLS. Our highest percentage is about 78%, and it's Zillow.
Great. Thank you. So another question, trends allowing pets, always the big topic in debate of pets. So I'm going to be quiet on this one, Angel. You got this whole thing. So go ahead.
So pets are extensions of our families. There are babies, there are grandbabies. So pets are very important. I would just say the trend is people are allowing them. There's a lot of amenities geared towards pets in multifamily housing spaces. Sometimes communities have a pet park, depending on where that rental property may be and what the community features have. But we allow pets, even service animals. You want to be very careful around vetting service animals and declining people with service animals. That is can be a slippery slope, and that would put you in a fair housing violation situation. But pets are wonderful. We accept pets. You can always put weight restrictions and breed restrictions, but trends on pets are everybody loves them. Everybody is allowing them.
Yeah. So we don't talk a lot around screening, and you get you can tell a lot by actually just pulling somebody's rent credit report and things like that. You can tell a lot. And when you talk about pets, service animals you cannot decline regardless. So
Right.
let's be really, really clear on that. Even if you advertise no pets and somebody looks at that with a service animal, you have to let that service animal come into the home. That is an extension of that person. So really important to separate from those two. So thank you for that question. Next question. What is the fair housing guidelines as it pertains to felony convictions of a prospective tenant? So that's another great question. We get that a lot.
So fair housing guidelines is not really protecting criminal felonies. Fair housing guidelines are for, or I'm sorry, criminal history is what would your criminal history criteria or guidelines are what you would put in place, because you're going to run a criminal background check, you're going to do a credit check. So when it comes to felonies, it's going to be that needs to be outlined in your background check criteria, whether you will allow someone with a felony, how old the felony has to be, the nature of the felony. That is what will protect you when screening a prospective tenant.
Great, thank you. And I always I always question a little bit or around felonies. Does it do you have to be consistent on the type of felony? Does a felony DUI matter to you differently than a felony theft? So you can get into a weird spot if you're picking and choosing what felons are accepted and what's not. And that's where the federal government has come in and said, hey, we got to knock some of this stuff off because it's really out of hand. And again, the one thing you don't want to do is trip that up. I did want to go back to the pet thing, just to let everybody on the call know. We actually screen pets in our company. So we have a pet screening tool that we use to make sure that the pet hasn't had a dog bite or is on a dangerous animal list and things like that. That actually verifies the breed of the pet and whether it's neutered or spayed and all those things. So we actually do screening on pets now too, which is something that most people don't. So I just wanted to put that out there for a shameless plug. It is the HomeRiver Group SFR Talk, so I guess I'm allowed to plug this here. So, all right. So thank you for that around, and I hope we are answering everybody's questions. If we're not, please feel free to put it in there that we're not. Does a high rent to price ratio indicate a low grade neighborhood? Or are there good, safe neighborhoods that have, I'm going to put no low or no, it actually says HO rent ratio. So just want to make sure that we're answering this question. What I will tell you about this is price doesn't typically always dictate the type of neighborhood that it is. In the prime example, I live in Pittsburgh, Pennsylvania. There's about a 2 block difference in pricing of where I'm at, that you can go to one side and get something for $1,000 and literally go 2 blocks down and it's 2,500. But the difference is the 2,500 one. There's more shopping, there's more of this, there's different things that people have available and services that are closer to them, which drives the rent. I wouldn't consider the other rent on the other side a bad neighborhood. So again, to me, when you start talking about, there's all kind of resources out there for you to research a neighborhood, research a property. I think there's school grading, which is important, right? People want to make sure that they're putting their children in the right school. So all of those things are a consideration when you're looking for a rental property, and an investment property. If you want long-term sustainability, you got to do your homework. It's more than just rent price. It's more than just returns. Now, if you don't necessarily care and you say, hey, I want to go and consistently get a 25% return and I'm willing to take some risk, you can do that all day long. But no, it comes with risk. Anything that you put an investment to comes with risk. So, Angel, I don't know if you have any more color to add to that or not.
I would just piggyback, the median income for our area or zip code also could dictate the neighborhood quality, or at least the rents in the neighborhood. Obviously, if everybody's in a high income group, they're probably, the rents would be higher. If everyone's making about $30,000 a year, the median income for a specific zip code, that will also have something to do with the rents, because you want to make sure that the average consumer can afford the rent for an area. And that's based on, the price that you place it. You don't want to, if the average median income is $35,000, and maybe it's always 2 to 3 people living in a home, you obviously don't want a $5,000 rent in an area like that. So there's, like Scott said, location, schools, proximity to convenience, properties that are far outside of a city usually are cheaper than properties that are in a city. So there's different things to consider around that. It's not just the high rent to price ratio.
Yeah, and again, great questions. Yeah, thanks for putting that in, Scott. Appreciate that. So, great questions. I'm glad this is what we want SFR Talk to be all about, is trying to answer questions and helping everybody in their investment future. So I think we got one more question, which is good because we're almost out of time at the same in the same breath here. So could there be markets that have both high appreciation and high rent ratios? And if so, what would that market look like? Um, I have not seen it all that much. Usually you don't get the best of both worlds. I'm sure that there are some anomalies out there. To me, finding that is really doing the research around up and coming neighborhoods. But with that said, most of the time you're going to have to take a risk for a little bit. So it depends on what your investment strategy is in general. If you're saying, hey, because a lot of times it takes around 10 years or so for a neighborhood to actually become the high appreciation neighborhood, because it takes time for that to mature. So if you're willing to hold on to investment for 10 years, then I think that they're out there. You just have to find those markets. Again, not sure what market you're in or what area you're looking at. I live in, again, Pittsburgh. Pittsburgh traditionally has always been around the 2-3% attrition rate. So we're stable. To me, when you talk about a high appreciation rate and high rent ratios, usually that comes at a cost of potentially a bubble happening. Because if both of those are rising at the same time, that can't happen forever. So those to me would be quick investments that you go in, you can make a quick dollar in a couple years and then back out of it. But again, you're going to pay for that. Because your price of purchase is going to be higher and probably wouldn't make you cash term in the short term with the rents that are coming in. So I'm sure there's some out there. I can't tell you what market that is. If I did know those markets, I probably wouldn't be on this call with you today. I'd be retired somewhere on a beach. But they are out there. And if you find one, please let me know. We'd have a whole bunch of people that would like to join you in that market. I'm certain they're out there. But usually you get one or the other. You get really good rents, less appreciation, or you get high appreciation, less on the rent to actually make money monthly on those things. So I hope that answered your question. I don't know if you got anything to add on that, Angel.
I will let you put a bow on it. That was perfect, Scott. Thank you.
All right, great. So again, thank you everybody for attending. I really appreciate. I hope we answered all your questions clearly. Would love for you to join us again in September. So be on the lookout for that invite. It's going to be all about financing your real estate investments, and we got a couple of professionals coming on that are going to be able to answer a lot of those questions for you and what that market looks like and financing of investment properties in September. So be on the lookout for that, and you'll see this smiling face again in September. Angel probably will not be on it in September unless she wants to join, but I'm sure she'd much rather focus on leasing. So thank you everybody for coming. Really appreciate it. Hope you got something out of it. And if there's a topic you want to hear from us, please feel free, contact us. We'd love to cover whatever topics anybody would like to know about SFR rentals. So thank you, everybody. Have a great day.
Thank you, everyone. Bye.